Okay, perfect. I'm just going to review the trade I took today, which is the 27th of July. And this was the trade I took, this 1 minute inversion. Now, displacement wise, you can't really complain. Structure wise, it's kind of terrible. In the moment, I wanted my break even to be this 5 minute for value gap. I was kind of going to use this as kind of an agreed upon DOL, and I kind of coped basically saying that this here was low resistance liquidity. So yeah, just even the way that we were displacing even prior to open so bearishly, it probably just wasn't a good idea to be longing. Key level wise, I was using this 4 hour for value gap on NASDAQ and the new week opening gap as a key level. Okay, I'll go to the higher time frames just to kind of top down my process, top down my thought process for the day. So basically, weirdly, I was extremely bearish. So again, I wasn't locked in. We've hit this daily fair value gap. So we're getting a rejection out of that. So not much more needs to be said other than that. And so yeah, so that's that. And then on the 4 hour, I kind of, prior to open, I was looking at the charts, and I kind of wanted this 4 hour to be kept intact as a DOL, which didn't really happen. It just displaced there pretty much straight away. And before open, I was looking as well, and we tapped into this hourly fair value gap, which was created out of the daily fair value gap. So obviously this high right here is a very high resistance high. So again, why would you be longing here? I don't know. I just wasn't locked in. Anyways, so basically the market opens. I don't really think there's any other key levels that were really of much more importance. Like at open, all I had on the chart was this 4 hour for value gap, this new week opening gap, then again just the daily and this hourly, just to kind of keep my bearishness in mind, which I just completely ignored. But anyways, we move on just for my learning purposes. So yeah, like the kind of idea I had from the 1 minute inversion was, there's a 15 minute created there as well. Anyways, was basically, I was kind of thinking about targeting this unmitigated 15 minute with this low resistance. Well, technically not low resistance because I wasn't locked in, because it's obviously just hit the hourly fair value gap. But look, that was my thought process. And then using the 5 minute here as an agreed upon DOL. But again, where this went wrong is when you're looking at agreed upon DOLs, this is my own learning, so don't think I'm preaching at all. But is you want low resistance liquidity running up to it to kind of confirm it as an agreed upon DOL. You can't just be like, it has to go back to that 5 minute, because realistically, with how bearish we are, that's probably just a good continuation trade. If we end up getting some structure here and then go lower off that, that's probably just a good continuation trade. So look at the space here to go break even is just, it's not really probably worth taking this trade. So yeah, so even if we just, again, I did cope thinking this, because on the 30-second, which I don't have here, this kind of looks like low resistance. But again, the lower generated low resistance should really be, I suppose, on the time frame you're looking at, which would be the 1 minute. You'd want to see some sort of more generated highs. We all know what low resistance looks like. It doesn't look like this, basically. And yeah, so I think really with how bearish we were, we've on the higher time frame, all of these highs are high resistance, not low resistance. So we've already come out of the daily, high resistance high. We've come out of the hourly, high resistance high. Now, potentially you can argue your stop loss is, quote unquote protected, but so is your take profit, and that's not what you want. You don't want your take profit to be protected. You want it to be low resistance. Ideally, we're not displacing out of hourly and daily fair value gaps. So then the rest of the session goes lower. Even if I didn't take this trade, I probably wouldn't have even caught any shorts, because again, I'm at the stage where I'm still a bit more mechanical with my trades, because I'm trying to just, learn and all. So again, maybe if you have good discretion, I know a lot of people took some shorts, but for me, it just wouldn't have made any sense to me. So maybe later in my journey, I probably would have been able to catch some shorts. But yeah, that's the recap. Hope this helps people just see what an unprofitable trader looks like, and not money messing. But yeah, so it's probably really the main lessons I'd say I'm going to take from this is, if you want an agreed upon DOL, there needs to be proper, obvious generated liquidity, because look at this structure, it's so bad. Like it's just falling knife and displacement. It's not. It's kind of just a pattern trade inversion. But also, you don't want your targets to be high resistance. Like I know sometimes you can kind of with discretion and weighing conviction, you could probably take trades towards higher resistance highs or just targets. But here, like, come on, like, what am I actually doing? But anyways, that's the trade. Hope this is helpful. It's going to be helpful for me more than anyone.